Hello, 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 everyone. Good morning, good morning, good morning. Happy Monday. How is everyone doing today? Welcome, Wavy. Will the cards fall over today? Will the Bulls keep pushing? Find out today in the place we call home. Exactly. Very good summary we had. Do have some potential topping patterns. Little bounce in crude. Still watching for the rollover played for anybody trading crude because even with a rollover, it could just be stuck in a range. Remember, Bob has talked about that, how crude runs and then sits and gets stuck in a range for a while, and I'm specifically watching for a pullback. But either way, if you're long anything in crude or especially with options, you will need to consider how to monitor your position to deal with theta burn. Jake the Snake, good morning. Davey, welcome, welcome, welcome. So, how is everyone doing? Again, if you're new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers and subscribers, please continue to like the videos and leave some comments. All right, just a reminder today, as we move forward, just lots of a couple of Feds speaking. Chicago Fed National Activity Index, that's just, it's a minor thing. So what I'm more paying attention to is the Fed Watch tool. It's now nearly 50-50 with a 50 basis point rate hike in May. So we're going to keep an eye on that. Also, now the gamma exposure has been updated. 44.75 is zero gamma. So above that, and that's on the SPX, but you can roughly go off the futures with that. Above that, based off this site, Tier 1 Alpha, you're in positive gamma, which has a dampening effect. And the dampening effect ramps up the higher you get away from that. And below that, you get the negative gamma, higher volatility effect. And again, the farther we drop back down, it starts to kick in more and more. So we're pretty much at that inflection point you see here, 44.52. So just slightly, we're really close though. It's just slight into negative gamma territory. By the way, PPI, let me see, where did my chart go? Where did my chart go? Here we go. PPI in Germany coming in super hot. Look at this. There's your chart going back from the January 31st, 1970 through the February release. Then this is as of this morning, coming in at 25.9. So Germany producer price index coming in really hot, and for to throw more fire on the flames. We've talked about this. Well, inflation is not going anywhere anytime soon, but you still got to trade the markets. Now, here's your U.S. fertilizer cost. There you go. That's not a pretty chart because this is going to keep hitting everything, including grains, but then grain feed will go higher. It's going to hit people at the grocery store just buying. When you go buy your broccoli, it's going to be higher. But it's also going to ripple into chicken feed, beef feed, and everything else. So we can expect this is not turned down yet and continuing to move higher. So keep an eye on inflation. Again, not going anywhere. Good morning, Sterling. Good morning, Lauren. So what am I watching for now? What do we have? Remember, watching for it to trigger that slight pullback, and then we will reevaluate unless it does drop. I did this in the market overview. Unless it does drop low in the S&P 42.55. Now, short term, we do have a potential double top. Remember, it is potential. So I don't necessarily front run these unless I get another shorter term signal. Why? Because you could easily see another push higher today. But the trigger point you see right now is pretty well formed. I have it on the aggressive targets. I'm going to shift these to conservative targets probably if it does trigger, but I can't do that yet because we don't know if it's going to make a push up into the open. But as of this point, this will give you roughly areas to watch for: 44.13, 44.05, then 43.95, and you see that's all still within the 4-hour rotation zone. And as we talked about yesterday, first cross of the daily rotation zone. So even on a bigger pullback, you have this pull back into this area where we could see another rotation up. Does that mean it has to go to new recent highs? No, it doesn't, but it could rotate back up. There is still some upward pressure in the markets. So we have to trade no matter what we think with the bearish news and everything else. We still have to trade the price action. So don't let news and like, oh, look at those inflation. Inflation is not going away and everything else with the Feds behind the curve and everything. This is all bearish, but don't let that influence what the price action is telling us. Again, we have to trade what is, not we think should happen. And against the flat 200. NASDAQ also, see here, potential double top. Trigger point is below 14,307. And then we have, let me zoom in a bit here. We have 14,239, 14,205, 14,171. And that's still within that 4-hour rotation zone. And that doesn't even take it again. That's the aggressive targets. I'll probably shift to conservative, but they're virtually the same at this point. It's only going to and we're not trying to hit exact prices. We're trying to get an area, and these still should all be hit if it does trigger. Beyond that, then I'd watch for about 14,081. You see here, and we're getting the first cross probably of the rotation zone. Although if you got a big sell-off, that could shift today in the NASDAQ. What does this mean? Even if it comes back down, we could see a rotation back up. Now, we could rotate back up theoretically. I'm talking way ahead of time after we get this pullback, make these double tops or topping patterns again, and then trigger a bigger pullback, which is what I'm watching for longer term. So I guess short term, pullback, medium term, some kind of bounce, and then longer term rollover play. And I covered, we could even see a bigger bounce in that S&P like I talked about yesterday in the market overview. Dow, no double when I talked earlier. This has to push up higher before it qualifies for a double, but I will be watching for it to push up and then a potential reversal pattern. If this does push up on your own charts, everybody knows the levels I use, so you can project them yourself. But just off that 4-hour, key area I'd be watching is about 34,180. Russell, again, with a slight push higher, that will also be a potential double. Russell's in an interesting position, though, because it can still break higher into that clear path, even if it does pull back and then gets that close above this about 2085, 2084 level. So not necessarily today. It could still have a little higher push in it. The DAX moving sideways, so I'm going to watch either for the breakout or breakdown play. Breakdown play would be below 14,200. Breakout play is above about 14,530. Crude, let's take a look at crude. Again, finish that double bottom pattern. Now I'm keying off of, and I updated the harmonics after we hit that double bottom, and we've hit that next harmonic. So again, could this push higher? Yes. Am I expecting a return to let me zoom out. Am I expecting a return to the 125, 130 area? No. I'm expecting even on another push higher. I just wanted to do this real time, updating these harmonics. That takes you back to that 50%. So we have a harmonic projection and target and the 50. And remember, I really watch for the big rollover play between the 50 and the 62. So does crude potentially have some more upside play in it? Yes. However, I am paying very close attention to rollover on this. It is pushing higher, but we are getting some toppy price action. I need confirmation. If you want to be patient on the confirmation, if you close back below the 4-hour rotation zone, currently sitting at about 103.25, that would be break this little upward sloping 4-hour trend line and this confirmation, and I'd start watching for a push lower, especially to this area that the doubles. I'm not getting super bearish on the bigger pullback. Again, bigger pullback is not huge, but could it push down to even the upper 80s? Yes, it could. But I won't get bearish on that with playing that until we can break below this area that formed the doubles. Because why? You could still pull back and stay in this choppy sideways price action for a while. Remember, it's trying to burn off this vertical up, vertical down. A lot of times when you see vertical up, vertical down, you do return to this 50 to 62.5 before you roll over. And we did have that. I showed you yesterday. We had that little potential mini double top, which nothing came of it. So that's why we had a little shorter term mini and a longer term double bottom, which then hit the targets. Then we hit the harmonics targets. So if you are long crude or crude plays, this is where I trail the stop and tighten it up as the price action goes higher. And then if we get that rollover, you don't want to make it like below this. I wouldn't be putting my stops below 106. They'd be down here somewhere around this 103 area if I was just playing the crude contract. And then like in XOM, I'm just using this as a proxy. Again, pre-market we're up. It triggered this double. Pre-market, it looks like it's going to hit that first target. And could it run a little higher? Yeah, and it still could technically fill that gap. But then longer term, I'm still watching for this potential where'd my line go? There it is. A potential head and shoulders. Just because this is potential head and shoulders, I have to wait for it to trigger. That's why I have the trigger point all the way out here. But I'm just keeping an eye. So again, if I was long XOM, all right, I'd be watching short term, raising stops, taking advantage of the double. And then if I had a longer term position, it would be with a stop if these potential head and shoulders on a rollover does trigger, then I would be getting out and watching for the bigger pullback. So again, it's still raising stops, going with the short-term trend, and being aware of a potential long-term pattern. And there are multiple systems I do track that are showing we could enter into a potential crude sell signal, and that's just for the slightly bigger pullback. Let's see. What did you have to say? The CL chart for crude price print 107 is different from, yes, because this, I'll get into that this afternoon. We'll get into the nuances of WTI crude is different. The CL is a basket, okay? Crude is a this is a basket. The WTI is a specific grade, so they're not going to track exactly the same. But whatever you're doing, do your analysis on that one chart. I use CL because it's so highly traded. So it doesn't really matter that there's the price discrepancy, because if you're tracking WTI crude, you're just going to do your analysis on WTI crude. That's the difference. Okay? So whatever you're tracking, don't mix up, all right, this one's higher, so that means this has got to go higher. No. Because right now this is trading 107.42, WTI is trading 109. So you're not saying, oh, that means it's going to push crude higher. No, it's just two different, you're looking at two different instruments. What is my thesis for a larger pullback on the ES? It's still I still have major long-term sell signals on it. So that's my thesis. I can't, again, just like in Tesla, even with the bounces, we'll take a quick glance at Tesla. Even with the bounces, longer term, I'm still watching for another major rollover play. Short term, we could run higher. Now with Tesla, I'm specifically watching for, with this up here, just a little gap fill, and watching the 1 hour rotation zone to see if it holds that rotation higher. Let me get through other things. We'll peek in at gold. Gold. Just pausing here, but if we start breaking below Friday's low, then I'm watching for a retest of the 16th. So roughly Wednesday's low with the little bounce. And then I'm going to pay attention to a potential double. But remember, we still have the head and shoulders, and we have not hit the final target. So that's a potential double. That would be no front run silver. Silver's holding up a little. And by the way, gold to silver ratio, silver's starting to gain a little relative performance to gold. And I'm watching for that longer term. So keep in mind in that if you're playing both silver and gold for your weightings. Notes, again, pushing down, another big push down. Retesting the lows. Yes, we do have a potential double, but I'm going to be watching for the lower prices. The potential double would only trigger if it got above the high from the 17th, 124.28. But if you notice here, 4 hour rotation zone. Coming up, and not getting a close above it and rotating back down. Your first sign was when it started breaking below this little flat shelf there, and then it's increased selling pressure, which pushes the yields back up. So if we take a look at our treasuries, our treasury yields on the 10, you see pushing back up. So yes, you do have a potential double point. I waited to also update this, bouncing off that harmonic right now, but we're at 224.5. You see how it almost nailed it before, nailed it right on now, but we can go to this pausing bar so we can get an idea on a continued push higher. This is using the longer term and the most recent swing now for the people following along at home with the harmonics. So minor would be about 231. Major, I'd be watching 235 to 238 and then 246. So that's key. Let's check that. Here's that 10, 5. A little bounce today, but still overall, I mean, up on the day, but still making new lows. So I do have my alert set down here. 10 sevens, or sorry, this was, what did I just do? Was that on the wrong one? This was a 10 2. Sorry, I marked the wrong one. I wanted this one. 10 5s. Where am I? Here are the 10 5s. That right pushing back down. 10 2s are what the Fed uses. 10 5s still hovering right above that zero line. 10 2, that's the one that made the new low and moving up. But this is the key one that the Fed watches, especially once it drops below zero for a month, which so many people, it's going to drop to zero, and then we're going to have to go to quantitative easing again and stop rate hikes. That's some people's long thesis. So, yeah, it was complete fantasy, Sterling. But that's, and either they're in la la land or they're complete liars or some of both. Or they don't want to shock the markets, and they're going to do what they're going to do. What's interesting to me is the other speakers last week had a quite bullish stance, and that's what I'm watching for continue, because there's lots of Fed speak this week. So we're going to have to see really what they want to position it as, especially since the markets have rallied back pretty hard. All right, so that's where we stand. Let me look. Oh, by the way, grains, little bounce now back. Corn up a little, beans up a little, but you still have these potential doubles in play. Although it is burning off, wheat is more looking like the same thing with crude. If it does bounce up, I am watching for a major resistance area at 119. 1195. Sorry. So that's where we stand. I'm going to wrap it up today and prepare for the open. Again, let's take a look to see what Wavy, you're welcome, Wavy. Let's have a good trading week. That goes to everyone here. Remember, follow your trading plan. Do just trade what the price action is telling you and your systems are telling you, not what you think should happen. And we will talk to everyone after the close today for market overview. Thank you for being here. Bye for now.